All right, everyone, welcome to a big week of This Week in Crypto. I'm your host, Brian, likely running it solo today and running without a camera. I'll be back with my face next week, but I know you guys aren't here for that. You are here for some analysis of the markets and exactly what's been going on in crypto after a very positive week that saw Bitcoin go above its 10-month high today. It's first time being above 30K since June, and Ethereum being above 2K for the first time since August. These were pretty big milestones and something that we have gotten a lot of requests for to sort of show exactly what has been happening and why we were able to scale this high despite iffy, maybe even unfavorable market conditions. There are definitely several reasons going on. Obviously, the S&P being one of the bigger ones, with crypto and equities still being closely tied, we saw that the S&P has had a great week itself. Gold and silver also doing very well, and some have been arguing that there's been a definite correlation between crypto and gold ever since the bank crises a little over a month ago. So with that said, take a look at some of these price returns. It's certainly been a market cap boon for most of the assets here in the top 100. Bitcoin up 10%, Ethereum 13%, other big names, Solana 21, Cardano 14, Hex up 14%, Arbitrum a big 28%, the leader of our top 100 assets here. Internet Computer 14%, Phantom 12, Stacks 12, Immutable X 15, Rocket Pool up 12%. Lido staked Ethereum 13%, Dogecoin plus 8. The list goes pretty on and on. Tons of double-digit gainers out there, and it looks like the one drop was TMAC DAO, which is funny because that was the asset that was just going on an absolute tear for majority of the year here, and finally when the rest of the markets go up in such a large boom the way it has, TMAC finally decides to cool off. But regardless, with that being one exception, it looks like it was universally a great week for cryptocurrency, and we're going to dive into several reasons why and look at Bitcoin and Ethereum in detail today. Excuse me, I have a minor cough today, but I'm going to power through it. So apologies if you hear a few surprise coughs throughout the call. One thing I want to look at right off the bat is the frequency of buy calls versus sell calls. And especially over the week, you've seen several instances where there have been points of doubt and then points of optimism that have impacted the market. It's mainly two big ones that just happened in the last couple of days. You can see there was a big point of doubt here. And we talked about this. We posted on Twitter after it happened. This was a huge stamp of FUD that occurred right after there was this big jump here above 30K, and then it kind of fell right back down, right? So naturally, the crowd said, oh boy, yeah, this was a temporary jump above 30K just to tease us, and now it's going to fall back to 28, 27, maybe even 25. Those were the calls we were seeing all over Twitter and other social platforms. And sure enough, after a little more of a dive down, we saw, kind of a blast off, and we actually saw Bitcoin get almost up to 31K. And then, as it was dipping just a tiny bit here, we saw just a few hours ago a big FOMO spike. A lot of people being very optimistic, thinking that this was the time to get in. We just saw it almost at 31K. Now it's back to 30.8 or so. So everyone should get their buys ready. And naturally, there was a little bit of a dive right afterwards. So we don't want to see this. We'd rather see a lot of doubt and fear in people's minds, because that is what tends to propel prices upwards, because it implies that people are selling off and taking profit, and they don't believe that prices will go any higher. This means that people are buying in and thinking that 30K is a mark of just the beginning, and now we're going to go straight to 40K and beyond. If the crowd in general is thinking this, it's more likely for the markets to do the opposite. That's kind of our mantra here at Santiment. It's been proven correct many times. The markets tend to move the direction of the crowd's least expectation. So with that said, it's been kind of a weird fluctuating week where, yes, there's always going to be a few more blue marks than red. There's always a little more optimism than skepticism. But this tight gap between the bullish calls and the bearish calls, that's not normal. Usually it's more like a almost 3-to-2 ratio, and this is like a 8-to-7 ratio. And I think the skepticism is kind of what has propelled prices upward the way it has. You know, this is of course the biggest FUD spike, and this is the biggest FOMO spike, but there have been several others. This one, for example, and ignore the fact that there's usually some extra blue on most of these spikes. That's going to be typical. But when there are big red spikes poking out above the blue, you can notice many times that's right when markets go up again right afterwards. So we want to root for these kinds of reds because it's just more and more fear that's popping up, thinking, oh, we're way too high. You know, look how low we got in late 2022. We're eventually going to drop back down. And that's just not going to happen unless, of course, people stop believing it'll happen and everyone gets all greedy and euphoric about the crypto markets. But right now, it's been kind of an up and down week, with the latest being a little bit of euphoria, but I wouldn't worry too much until you see like a huge crop of them popping up all at once. So that's a little bit on social trends. Let's also look at some of the top 10 trending words right now. We can see that EOS is actually the #1 trending asset, followed by Ethereum. It's actually full of assets, and that's something we haven't seen in a while. It's, you know, for the past month been a lot about banks or FTX, which is also an interesting story right now, or, you know, general FOMC discussions, things like that, or even scams, a lot of bearish words. But now that a lot of assets have been pumping, you're seeing many actual asset tickers showing up as the top trending words. Let's take a look at EOS really quick because it is the #1 asset. Just going to duplicate this Bitcoin tab really quick. So EOS, it's done pretty well. I mean, ever since the 27th or so, we can see its price is up 13%, but certainly nothing too crazy. So if I go back to the trends really quick over here, what do we see? Yeah, it doesn't look like it's anything special. This could be very like just an inorganic pump caused by a small group that's talking about EOS a lot right now. And we can see Telegram seems to be the reason. There's just some serious pump and dump groups. It would appear, based on the fact that it's only Telegram, that is talking a lot about EOS at the moment. And I would be wary of this. If it was more of an organic pump due to a partnership with EOS and a major company, that would be a different deal. But this looks to be mostly a Telegram perpetuated pump at the moment. So besides that, obviously Ethereum is the big story. We talked about the fact that it's up 13% over the past week, currently right at $2,100 looking at my charts. Why don't we take a look at some of Ethereum's metrics before we go into Bitcoin for a change? I know we usually hit on BTC right off the bat, but considering Ethereum is the talk of the town at the moment, let's see what's going on. I want to warn that our daily active addresses is a little wonky for Ethereum at the moment. So we're going to skip that. But other than that, we should have decent metrics to look at. trading volume is actually looking sort of mundane at the moment, even though obviously we had this big milestone going above 2000. Let me actually refresh to the past month. Okay, that's looking a little better. So yeah, trading volume as I see now, as of today, it's at its highest in about a month, and it has been climbing a bit with the price. So that is a good sign. It's showing that trader interest is there for this rally, and they are trading more and more into it. Generally, if there is a rising amount of volume going into a rising price, that means the price rally can be sustained for a while. If it were to be flat or going down, that would mean there's disinterest in it, and the rally will likely come to a halt, because prices tend to move in the direction, unlike expectation, they move in the direction of trading volume moving higher and higher. Circulation wise, yeah, I do see that we have no data for the current day, but basically circulation other than today has been fairly normal, nothing outside of the realm of expectation. The MVRV for 365 days. Okay, so this is where we have to be a bit concerned. So 365-day MVRV, the average trading returns of active addresses over the past year sits at plus 35%, whereas the 30-day is at plus 15%, and that's about right where our danger zone lies, right about here. And you can see that other than right here, it hasn't been close. So now that MVRV 30-day is right about where that danger zone typically is, we need to be a little wary because it's at that point now where historically you'll typically see corrections. Not all the time, right? We saw a big cross here back in July going well above, and the price continued to rally for a bit. We did have this one temporary dump that put the MVRV back below the danger zone, but then it just continued to rise and eventually it fell, right? Here, it went above and the price kind of topped out, but it didn't really dip back down, which was great. Obviously, January was when prices all over the place were really starting to break out. But the only difference this time is we're seeing a very large 365-day MVRV, meaning the long-term and the short-term MVRVs are both sky high at the moment. And that wasn't the case when the 30-day MVRV was above the danger zone back here in January. You can see the 365-day was still way below the 0% mark. And obviously way back here, it was extremely low at negative 40%. So these were more of like a conflict where the short term was high, but the long term was low. Now the short term and long term are high, and we have to be a little scared of the fact that the average trading returns on the network are so overheated at the moment. You know, it's still, there are other metrics we're going to look at that might point to otherwise, but at least for this one, it points to almost a certainty of at least a cool off period. It could be a very, very temporary dip. It could just be a flattening out too, where, you know, it's more like what we saw here, where it goes above the danger zone and then prices tend to, you know, at least hover for a bit, or even here right after this one was crossed. But as far as historic times to add onto your portfolio or open a position in Ethereum, this looks to be a more concerning time than usual. Another thing I want to look at is the funding rates. Particularly, we can see Deribit here that's had some very wild swings in terms of its long and short perpetual contract funding rate. When people are longing, it generally means that there is a higher likelihood of a big correction. When they are shorting, it's a higher likelihood of those shorts getting liquidated and prices moving up using those liquidations as rocket fuel. Now, I'll just get rid of the other funding rates because they haven't been nearly extreme as Deribit. and I'm going to make the axis a little bigger here so they aren't running all the way off. That's better. So what do we see at the moment? We saw tons of shorts back here all the way in September. This was, of course, right where the bottom was. So the shorts accurately predicted that we were not going to be going too much lower. One big final short here in November. This was right when the FTX collapse was happening. And then look at this large block of shorts that occurred for about 2 weeks in the beginning to mid-February. Prices kind of stayed flat, and then eventually the shorts went away, and that's when we saw a final dip, a little bit of longing here, which kept the price down, some shorting, and then it kind of got flat. Prices went up, and we've been seeing shorts ever since, which is great to see, actually. A lot of disbelievers at the moment on Deribit, and it's basically at the same short level that we saw back here when we were bottoming out in late September. So I like the look of this as long as traders are showing disbelief, and regardless of what they're saying on Twitter, if they're putting their money on bets that prices are going to go down, that really does raise the likelihood of prices moving up. So that is a positive sign, even with the average trading returns being this high. Now, what else can we see? We see that whale transactions are starting to pick up again. Back here a month ago, that was when whale transactions absolutely exploded. And they exploded right after a big correction down. Yeah, God, Ethereum was all the way down at 13. Yeah, got below 1400 here on that dip on March 9th. This was during the banking crisis, but it quickly recovered. And, you know, looking at it now, ever since that, if that was your time to buy while everyone was panicking about banks, you'd be up over 50% now on your Ethereum investment. Pretty insane. But now I see the whale transactions are picking up again. This is a bit of a concern because it's happening on a rise this time instead of a fall. Typically, whale transaction spikes are good indications of a turnaround. So at least in terms of the whale transactions going on, they are moving up as prices are moving up, which is a concern, but we need context, which is why we can look at the amount of Ethereum addresses, which we'll get into first, as well as the percentage held by those different tiers of addresses. We'll start with the 10 to 100. These are kind of the smallest shark addresses. They are staying flat at the moment. 100 to Ethereum, also basically staying flat. And now we get a much better signal looking at the 1,000 to 10,000 addresses. There was 5635 back on March 8th. And now there are 5798. That's a pretty decent percentage gain of about 2.9% just in the past 6 weeks, 5 weeks or so. But on the other hand, the 10,000 to 100,000 have actually been going down, especially from its peak here 2 months ago. There were 1,206 addresses holding 10,000 to 100,000 Ethereum, and that has dropped down 2.9%. 35 addresses have gone away. So if we merge these all together, we just go here, get rid of the red line. And yeah, it does look like the amount of addresses are slightly going down. You know, this was around where the bottom was, right as the FTX collapse was happening. And you saw this explosion in new addresses. So that would have been a good time to buy, considering sharks and whales were really starting to stack up here. And it's kind of flattened up ever since the new year. So one can argue, you know, prices were really being propelled by Bitcoin having the great start to 23 that it did. And then we saw one big jump up. This was right when the bank collapse happened, the second week of March. And then ever since then, it's dropped back down. And also to do our due diligence, let's take a look to see if there's a difference and the percentage held compared to the amount of addresses. And yeah, not really. If anything, it's actually dropping a little bit more. They peaked the 10 to 100,000 addresses, which is a very wide range, I realize. They peaked here in December 19th, almost 4 months ago now. 54.74% held by these sharks and whales. They're down to 53.26% now. Not the greatest sign, but I said this in the article that I posted a couple days ago, actually just yesterday. You have to take it with a grain of salt when it comes to Ethereum, because Ethereum is so known for staking and DeFi and holding in addresses where there's going to be muddled data, where someone who's a millionaire may have their Ethereum in dozens of different small staking addresses where they are a whale, but they've split their coins into multiple DeFi avenues, which can skew the data. So for that reason, it can often be a little bit frivolous to look too hard at those types of metrics, but I still think they're important. As is this one, the ratio of daily on-chain transaction volume and profit to loss. You can see that yesterday was the highest spike in profit taking since mid-January, and that is a short-term concern because we don't want to see that kind of profit taking when it comes to transaction volume. We prefer to see low spikes like this that typically predict bottoms occur, just like this one and this one. You can see on most of the lowest ones where there's a lot of losses being recorded, that's where you saw big bounces. And that's what we want to see ideally. But right now things are quite high, so we have to be a little concerned with that. $1 vested age, you can see that the amount of dormant addresses moving around is still staying quite high at the moment. The line continues to climb, currently sitting at 463 days. For context, a year ago, it was at just 252 days. So we're creeping up towards twice as many days that dormant addresses have sat in their respective addresses. We need to eventually see these lines start to dip down a little bit and have a good enough reason for sharks and whales to move those coins that have been sitting for a long period of time. Generally, if you start to see a flattening out or especially a dip down, those are when the bull rallies typically start. So we'll be keeping a close eye on that. Right now, it's continuing to stay fairly dormant as the mean dollar invested age continues to rise. Network realized profit losses, they're staying pretty much in a tight up and down range. You're obviously going to see a little more profiting considering the over 50% performance that has happened just in the past 5 weeks. But nothing that is extremely concerning here. Supply and exchanges, we can take a look and see that the supply since late March, or just over the last couple of weeks, it's gone up a tiny bit. It was sitting at about 10.31, now at 10.39% on exchanges. But that's certainly not a concern. You can see just how different things were looking right as the merge was happening here in mid-September, when the supply and exchanges was at 15.82%. Obviously, about a third of that has been moved off of exchanges now, which is massive. And just FYI, for those unfamiliar with why this metric is so important, the more supply that is on exchanges, the larger likelihood that there can be a sudden sell-off that can really impact markets negatively. And when it's low, that means there's a limitation to how much can be sold off. Generally, coins move to exchanges just for one reason: it's to be sold. You don't move coins to exchanges so that you can buy more. It's really only for selling. So we'd like to see that it's low like this. Now, it's interesting to see that Ethereum's social dominance is staying so low at the moment. Currently, it's at 10.10%. Its biggest spike happened about 2 months ago here, and that was when it was bottoming out. And I like to see that it's a little under the radar. You know, there have been other altcoins that have been surging as well, and they've been kind of capturing a lot more of the traders' attention as of late. But considering Ethereum is not really getting a ton of discussion, even with its big milestone above 2,000, I like to see that. Now, it's a little conflicting, of course, because we do see that it is trending at the moment. As I mentioned here on our social trends, it's number 2. So, you know, looking at Ethereum on the social trends page, there does seem to be something that is causing it to show some spikes. It could just be, yeah, it's probably just this from yesterday with a little bit of carryover at the moment. But at least right now, social volume has calmed back down. And weighted sentiment, you know, you can see that it's staying very low. I think this is just a reflection of not a lot of discussion going on. And until that changes, I think that Ethereum is looking to be a little under the radar, especially with such big milestone. Development activity, actually, interestingly, it's come down a little bit lately, but I wouldn't be too concerned. You know, this drop still reflects an asset that is getting over 100 GitHub submissions, notable GitHub submissions every single day. Now, before we transition over to Bitcoin and look at some other things, let's take a look at NVT really quick. And we'll start with Ethereum since we were just talking about it. Assuming it wants to load. Well, we'll start with Bitcoin instead. So Bitcoin here, 1, 2, 3, 4, 5. Okay, so 9 straight months now, we have seen a bearish signal for Bitcoin, which is confusing because obviously prices have finally bottomed out and they've climbed now for 4 straight months, but they haven't been huge climbs, so to speak. They may seem like it, but compared to the absolute tears that we were on in late 2020, these are relatively tame. And according to the model, the amount of unique tokens moving on the BTC network compared to the market cap, it's actually still quite low. And we need to see a little bit more pick-me-up from utility, from a utility standpoint in order to feel comfortable about prices really going on a big surge long term. You can see several anomalies on this chart, but overall, you know, you have to be tapering your expectations until the bars here start turning a neutral color or especially a green color. Okay, there you go. Ethereum has now refreshed, and we're seeing pretty much a similar pattern with very high bearish bars at the moment. So this adds to the concern that we saw with MVRV, where average trader returns have been very high and the circulation has been very low. This is not a great combination for the midterm, and I have to, you know, advise caution, so to speak. Obviously, we don't give investment advice on these calls, but we can report what has happened historically when we're in the kind of conditions that we're in right now. And historically, this has been a concerning type of setup when we see MVRV super high, circulation super low, and obviously things like profit taking is very high as well. Okay, so after taking a look at NVT and plenty of Ethereum metrics, let's go over to Bitcoin now. And we'll start here with some of our special metrics that look at Bitcoin's sharks and whales and compare with what's happening with stablecoins. So what do we see? We see that on the Bitcoin side of things, we're continuing to move down in terms of the supply held by sharks and whales. They're holding 66.5% after peaking here at about 67.3 back about 3 months ago. So they've been steadily taking a little bit of profit, and the lower tier assets are gaining more, which is a concern, of course, if we go back, say 2 years here. So if I highlight the Bitcoin line here, yeah, look at how it peaked here in October 2021. That was just a couple weeks before the all-time high hit in early November. And then it absolutely dropped as the price of Bitcoin dropped here. You can see how it's reflected when you compare the two. Absolutely a similar type of pattern going on. And you have to look at this latest trend where the green line's moving down and prices are moving up as a bit of a bearish divergence and something to be concerned about. That being said, the reason we have all these other lines here, stable coins, and their 100K to $10 million holders, is because they reflect the overall buying power that's going on by these large players in crypto. And they've shown kind of a mixed bag over recent times. I'll zoom back into just the last 6 months so we can take a look there. Now, Tether is obviously going to be the most important, and Tether's looking pretty good right now. It kind of had a little dip here in mid-March, but over the last 4 weeks, it's actually climbed back up, and they are very close to holding their 6-month high again, which is just about 39.16%. They hold 39.08% now. And as long as this buying power is going up, even with Bitcoin's sharks and whales moving down, this can still keep prices moving forward because buying power for stable coins is so important, especially Tethers, because it's obviously the #1 market cap stable coin out there. So basically the theory is if Bitcoin is moving down but stable coins are moving up, it means sharks and whales are keeping their money in crypto, and they could easily just be moving to altcoins and things like that. What you don't want to see is stable coins moving down as Bitcoin is moving down. That's a bad combination that can really foreshadow big drops in markets over time. But Tether's looking good. USDC has also recovered quite a bit. If you guys remember, there was the big concern about USDC going back to late February, and it dipped to its bottom here in the second week of March. And since that time, people have warmed back up to USDC, and they're not as concerned now. With the rumors of it being a security and potentially even being removed from exchanges, that doesn't seem to be an issue anymore. So it's back up to 34.7%, still not near where it was here, over 40% back in mid-February, just 2 months ago. But it's at least moving back in the right direction. And that absolutely has contributed to prices moving up. The fact that USDC and USDT are both being accumulated still, even with Bitcoin, sharks, and whales dropping. BUSD looks to be kind of in a ranging period. It isn't moving up or down at the moment. Excuse me. DAI is in kind of the same spot. It dropped way down as USDC was back in early March, but it recovered alongside USDC a lot more quickly than USDC actually, and it's kind of ranging for now. True USD, now we're getting into the 5th and 6th largest stablecoins. True USD is very down actually, and this isn't as big of a concern simply because the market cap isn't as large. But yeah, it does look like sharks and whales aren't showing much interest at all in accumulating TUSD. Same with USDP. It had this huge skyrocket back here right as the banking crisis was happening. And then since then, they've really dumped it hard. Just in the past 5 weeks, it went from 38.9% held down to 21.8%. So sharks and whales have dumped a total of about 44% of their USDP just in the past 5 weeks. But like I said, the two most important ones to look at are USDT and USDC, and they're both still moving up, which is nice. But that said, I still have to be pretty concerned about the fact that Bitcoin, sharks, and whales are moving down. If we just look at like the last 4 weeks here, we do see a very mild tick up just in the past 3 days or so, but you can see the trend certainly isn't being broken of a downswing. All right, 6 months again, and let's take a look at the social dominance Bitcoin health line. You can see exactly the point in which Bitcoin's discussion rates started to go back in the right direction. Right here, as the banking crisis was happening, this is typical. There's some sort of news report that causes people to look at BTC a little bit more compared to altcoins. And in this case, it was the banking crisis. And that caused social dominance to skyrocket, and it benefited Bitcoin immediately. You can see how Bitcoin's price went up as social dominance went up. And it even had this second leg up here just in the past 3-4 days, with Bitcoin's social dominance being very high as it crossed 30K. People were anticipating 30K here, and then it actually did. And it's funny because once it did, Bitcoin's social dominance dropped, and it all kind of went more toward other assets. Ethereum a tiny bit. We saw that its social dominance didn't really move too much, but more so just other assets like EOS. I know Solana had a big week, and that had been talked about. Dogecoin at the beginning of the week had a lot of discussion rate. Obviously, with Elon temporarily moving the Twitter logo over to a Dogecoin logo, that was taking away from Bitcoin's social dominance. But typically, as long as you're seeing the Bitcoin social dominance line above 20%, which is what this zero axis designates, it's a good sign for the future of crypto overall. You want to see Bitcoin being talked about a lot, as that is what typically perpetuates organic pumps. I'll get to funding rate here. Why don't we look at the overall Sandsheets model, and what do we see? It looks like the positive funding rates are there, but they're scattered with a lot of neutral as well. I'm not too concerned about this. I think, ideally we'd want to see a lot of green lines showing that people are still shorting, but that's not really the case anymore. Things have kind of mellowed out. Even though Ethereum has that big short spike in Deribit, Binance is kind of neutralizing it out, and it's kind of just showing a neutral signal. XRP is actually showing a ton of longing, so I'd be a little concerned there. Yeah, but nothing special on the funding rate side. It's pretty much in a neutral state at the moment, meaning that traders just aren't too sure of where prices are going to go next after this great run throughout, pretty much throughout 2023 for crypto. All right. I think actually one other thing I want to look at, MVRV model, a few anomalies going on. We see that Binance coin is showing a big underbought signal. It's obviously been struggling quite a bit compared to the rest of the markets. So if you are someone who wants to buy into other trader pain, Binance coin could be worth a look. Literature, is that, of course, it does a refresh now. Well, overall, it looks like there are mostly semi-overbought signals going on in the markets, which makes sense with prices moving very much upward at the moment. And we have to just be a little cautious about that. Another thing is this Ethereum Beacon Chain withdrawal dashboard. This is just a new Santiment feature that I wanted to show off really quick. It's got a bevy of features. If you're interested in taking a look at what's been going on the Beacon Chain at any given moment, you can see there's 33 validator withdrawals today, 7,719 total fee claims, 26,291 Ethereum withdrawn from the Beacon. And you can see that there have been barely any Ethereum deposited, but plenty withdrawn over just the past 24 hours or so. And you can even take a look at the validator withdrawal addresses. So obviously any of these you can just plug into the any sort of ETH address analyzer and see exactly what it's been doing over time. In fact, we could do something like that. I can't copy paste it, can I? No, it doesn't look like I can from here. That's okay. Just know that you can actually go to top transactions, which I want to look at for a moment. Let's make a new template really quick. Top transactions. Interesting. Seems as though top transactions are down at the moment. Take a look at something like Tether. Okay, so it's just Bitcoin. But anyways, like you can just go into any address and you can change it instantly and take a look at exactly what that address is doing at any given moment. And we can actually look at our Sandsheets model that shows the top transactions at any given point in crypto. And you can see that there was obviously another huge spike in DAI. There have been a bunch of $200 million, which not withdrawals, but just big moves where there's like minting going on and burning of large amounts of DAI. I reached out to their team, but they haven't responded yet. I want to find out more on what's been going on there. There was also another huge Bitcoin transaction. I posted about it actually. Let's see if I can find it really quick. Yeah, so you can see that there were a total of 11 separate 2000 BTC transactions that occurred. And they both happened as outflows were occurring. So it appeared as though the summation of those transactions resulted in coins moving away from exchanges, which was a very promising sign as Bitcoin was crossing 30K at the time of this posting, which was 4 days ago. It was just on the verge of hitting 30K, which it eventually did. And this metric kind of predicted that there was something positive going on with all of this BTC moving away from exchanges. There were two clumps of huge transaction waves. The first had 8 different transactions that amounted to $476 million worth of BTC moving. And then the last 3 had an additional $179 million of BTC moving. And that's the kind of thing that we look for here at Santiment, is these big moves that are hinting that something massive is about to happen. So our model kind of picked up on that, and that's what allowed us to put out that post. We also had, just a couple days ago, a big onslaught of altcoin transactions. Look at all of these, and it's interesting because these are graphed alphabetically, and almost all of them happened in like the A's and the B's. And this is just a theory, of course, but it's possible that there was some sort of algorithmic bot that just decided to stop running, you know, the top 8 or so of its alphabetical altcoin trading ARBs at any given point. But you can see there were just massive ones, 27.9 million for ApeCoin here. There was another huge one for Aave and another huge one for Lido DAO, just to name a few. But yeah, I posted an article about it if you guys want to check it out. It really talks about how altcoin moves like this can be a predecessor to a big price swing. And I think with all 3 of these, they saw corrections on their prices shortly after this article was posted. I also wanted to bring up the FTT surge that has been going on. We saw the biggest spike in trading volume, address activity, and network growth yesterday. And this comes as the news came out that about $7.3 billion has now been recovered from the FTX exchange. And more importantly, consider it just a rumor. Maybe even roll your eyes if you think it's not a possibility. It's not our place to have an opinion on whether it would or wouldn't happen, but the rumor is that they are talking to stakeholders about the possibility of relaunching the exchange. Whether anyone would actually take it seriously, that's for the crowd to decide. But that rumor alone was enough to get FTT some pretty serious sudden volume and address activity and new addresses created. 879 new addresses were created in just those past 2 days, which was the highest spike since the collapse happened. And more importantly, the price, I believe, over a very small window, like an 8-hour window, went up about 105% or so. So it more than doubled and went back up to $2. Let's see if it's still above $2 at this time. Barely. So yeah, it started to drop back down again. If we go to just the last week, yeah, you can see the huge sudden spike that occurred where it went all the way up to 262, had one more leg up, and it kind of dropped ever since. But yeah, it's still worth keeping an eye on, just even if it's just morbid curiosity and fascination. It's still the 210th largest asset, which is interesting, being the native token for a bankrupt exchange. There are speculators all the time, just as we saw with Luna last year when that famous asset collapsed. It dropped off a cliff, and eventually there was that wave up in interested parties who wanted to buy it at pennies on the dollar. And that, just like that, we see that there's some speculation going on with FTT now that's keeping it afloat. Anyways, Gary, maybe you can read off a few questions, whether it's about assets or just clarification about what we've talked about so far here today.
Yeah, sure. Last week we promised to review a couple of tokens. Maybe if you had some voice left, maybe we could have a look at GNS and EGLD. Gains.
Yeah, let's start with the first.
Gains network. Yeah, right. This.
On Arbitrum, I presume.
Yeah, I think so.
Gotcha. So let's take a look at the last 3 months for GNS, see what's going on here. So yeah, it's been on a bit of a tear just in the last couple of days. Its price is up 10.4%, pretty modest, and in line with what a lot of assets have done after Bitcoin had its big gain above 30K. It looks like trading volume is up quite a bit. This is the highest trading volume bar in about 4 weeks, just under 4 weeks or so. So that's significant and does show that traders are buying this pump for GNS at the moment. It's the 226th market cap ranked asset at the moment. Transaction volume is fairly dormant. Daily active addresses doesn't seem to be doing anything special at the moment. So even though trading volume is up, it's mostly people who were already in GNS, not as many new addresses being created as we would like. Circulation fairly dormant at the moment. MVRV showing about -7%, which is a good thing. And the 365-day MVRV is actually off the axis. So active traders over the past year are actually down -65% at the moment. That's huge. It's a fresh new asset though. I mean, we, at least through what we have data-wise, it's only been around for about a month and a half. So take it with a grain of salt, but at least 30-day wise, it shows that it is underwater, and that means that there is less risk than usual in buying into GNS. So that is a positive sign. Whale transactions, not a lot at all going on at the moment. The amount of GNS held, or the amount of addresses for key addresses, let's take a look. So it's priced at at $7.47 at the moment. So we can take a look at 10,000 to 100,000, 100,000 to a million, and there aren't even any 1 million. Okay, so there really aren't too many. This is a very small asset. It looks like there are, that isn't right. Well, yeah, we're gonna ignore this because it's showing negative amounts of 10K to 100K addresses. Let's look at the percentage of supply held by them instead. Showing negative numbers. It's so strange. Yeah, it's too wonky on the supply distribution for GNS at the moment, so we're going to skip that. Ratio of transaction volume and profit to loss, not showing anything special, mostly neutral. It is a good thing that, you know, prices have pumped a little over 10% and there aren't these huge spikes going on, showing that there's some major profit being taken. Mean dollar invested age is moving up and up. So no dormant movement, especially being such a young coin, that isn't surprising. Network realized profit loss, nothing special. And by the way, I think the supply distribution being wonky is just because it's such a new asset, guys. I think it just needs a little more time, perhaps 6 months at minimum before this starts to become significant and show meaningful data. Social volume and dominance, this will definitely show meaningful data. Yeah, so whenever we see these big social volume and dominance spikes, that tends to be when tops occur, especially for smaller assets where they aren't really talked about much at all unless there's a price pumping. That's where you'll see these being very significant. And right now, there's a little bit of a climb, but nothing I'd be too concerned about. So as far as the crowd, you know, suppressing prices, that isn't seeming to occur at the moment. Weighted sentiment, yeah, this is mostly just due to a lack of discussion, but good nonetheless that it's in the negative territory. We'd rather see that than something in positive territory, and you could see that prices were topping out when there was a high weighted sentiment at the beginning of the month. And that's it for GNS. Thank you for the recommendations. My first time looking at it. What was the other asset ticker, Gary?
The other one was EGLD. Now it's called Multiverse, previously known as Elrond Gold project.
Yeah, we've taken a look at Elrond Gold, now known as Multiverse X in the past. It's now the 50th ranked asset, so it's been up there in the top 100 for quite some time now, actually. As of now, let's see what's happening. So this is a little bit too zoomed out. Let's go last 6 months. Trading volume looking neutral at the moment. It has seen a nice pump just in the last couple of days, just like GNS was. It's up about 8.3%, pretty modest. But trading volume hasn't really been following. I'm a little more concerned about EGLD compared to GNS because of this. It doesn't look like there's enough trading volume to support a continued rise. You know, we want to see something more like what we saw in mid-February, where there's just a huge trading volume spike as EGLD is rising, and that can imply that the trend will continue. We don't have as much data for EGLD because it's not an ERC20. We should at least have development activity, I hope, and we do have social volume and dominance. And we do see that there were some huge spikes in discussion rates earlier this week. As the price was dipping, that's actually a very good sign, because when prices are moving down and you suddenly see a big spike in discussion rate, it often is a sign of fear and people thinking that the asset is going defunct or something drastically bad is happening. And as we often see with social dominance spikes, they tend to cause price turnarounds. And as of now, things have kind of neutralized, gone back to normal. So prices can kind of go either way according to social volume and dominance. That said, with the trading volume being so low, I'm a little concerned about a rally continuing for EGLD. It could still, of course, be carried by just the general markets moving up. But as far as EGLD going on an independent run, these metrics are pointing to that being a likely scenario right now. Weighted sentiment, it was actually, I think this is mostly just due to a lot of discussion, so I wouldn't pay too much attention to the spike, but now it's back low, meaning there's just not as much discussion related to it either way. And then finally, development activity. I see that EGLD is actually a very highly developed asset. It was up at about 85 submissions per day back in January, and it has dropped off a little bit, but still, even at 21.5, that puts it in the top half of altcoins for sure in terms of notable GitHub activity. So yeah, it does appear to have a dedicated coding team that is working to innovate and improve the project for the long term. And that's what you want to see in your long-term investments, is an asset that is getting proper development activity. And if we go to, let's say, the last 3 years, yeah, I mean, that's what you want to see. Yeah, even with this tiny drop here, over time, you can see there's just more and more and more development activity. And there is a team that is actively improving the asset. So I like to see that. All right, that said, since I'm losing my voice, the last thing I want to do here before we finish this call here is take a look at the top 20 or so in development activity overall. I would presume that our usual culprits are still going to be at the top: Polkadot, Kusama, and Cardano. Give it just a moment to load. So that's exactly what we see. It's still Polkadot, Kusama, and Cardano in the top 3. And then as we go below, we're measuring the last 30 days, mind you. So this isn't just all-time development activity. It's looking at the past month specifically. We're seeing Cosmos has actually moved up, and it's now the 4th position in development activity. Internet Computer, number 5, Hedera, Status, Ethereum still sitting there at around the late top 10. Decentraland and Chainlink, that makes up the top 10. And then going a little further down, we have Aptos, Vega Protocol, IOTA, Flow, Filecoin, Osmosis, Multiverse X, Optimism, Solana, and Uniswap make out the top 20. So if you have an asset that is getting a ton of development activity, it's a likely sign that that asset is working for the long term and has some good sustainability in the crypto ecosystem. It's not a coincidence that you see most of these market cap ranks and they're in the top 100. They got there through a lot of hard work and improving their assets, and obviously having confident investors behind them who are speculating that their prices can be higher than where they are right now. All right, with all this said, guys, I think we'll cut it off right at the hour today. I want to thank you all for the great questions and for tuning in and supporting Santiment as we continue to grow and come up with exciting new features and more models and things that are important to you to help with your trading. So for Gary and Maxim, who couldn't join today, I want to wish you all a great, happy, and warm weekend. Follow up with any questions you have on our Discord, and we'll talk to you next week, okay?